The biggest kind of misconception that I see, especially small contractors doing, is that they either don't account for their overhead and they just put like a profit number and kind of boil that in, or they have this assumption that their overhead is lower than what it is. So the misconception is that they assume that their overhead is smaller than the big guys, when in reality, the big guys' overhead is way smaller percentage-wise than theirs.
Welcome to the Construction Leading Edge podcast from constructionleadingedge.com. My name is Todd Dawalt. That's spelled D-A-W-A-L-T. I'm your host. And here at Construction Leading Edge, we're all about helping construction business owners have more freedom, more impact, and more wealth by systematizing your construction business. Think self-managing company, a business that runs without you. Here's what you're going to get from today's interview with Chris Lee. Chris talks about his experience starting and selling two businesses in the construction industry, one of which was acquired by Procore, what Chris did to boost the valuation of the first business that he sold. Chris talks about some common mistakes that he sees contractors making that lead to financial issues that they can't really understand where they're coming from. Chris shares a few interesting AI tools, actually practical AI tools that you may want to check out. We talk about why revenue is vanity, profit is sanity, and cash is king. Chris and I chat about some practical tips for getting your team on board with implementing a new process or getting them to use new software. And we talk about some of the problems that Chris recognized with Quickbooks and the software company that he recently launched to solve them. This is basically a masterclass in increasing the value of your business from a guy who has started 3 companies in the construction industry and has sold 2 of them successfully. So let's get to it. Here's my conversation with Chris Lee. Enjoy. You're doing some pretty interesting stuff now. And you've done some interesting stuff, but I want to go back a ways and talk about, you had a construction company that you started. You took it out to market to try to sell it, but you found out it wasn't as valuable or maybe even sellable as you thought. Let's talk about what that business was and why wasn't it as valuable as what you thought? And then what did you do to make it more valuable?
I started a contracting business, a specialty contracting business back in 2012. Didn't really have a lot of experience in construction prior to this, but in Austin, if you're familiar with it, I mean, this city was on fire coming out of the recession. There was cranes on every corner. There's a lot of building going on. And while I didn't work in construction, I worked very closely with ownership groups that were building hotels and hospitals and kind of the technology that went into those. And so I actually started a Division 27, 28 structured cabling and access controls and securities company. And, we're focused on new construction, building out, all the commercial office space and buildings that were coming into town. And again, without knowing much about Austin, I don't know how much you know about it, but there was like a big migration of companies from like California and from New York and stuff like that. And they were setting up headquarters here in Austin. And so for someone like me that didn't have a construction background and maybe didn't have the network, I was able to kind of get in there and start bidding on jobs because a lot of these people moving here, they didn't know anyone. So they didn't know that like I hadn't been in business, this, that, or the other. And so I built this business and started growing it, pretty quickly. And, I think probably 4 or 5 years into the business, we're doubling revenue every year, which is, as you can imagine, is easy to do when you're small, and especially when the market's really hot. But I got to a point to where I had this business. I had started another business, which I'll talk a little bit more about later, but I needed to get away from this business so I could go focus on this other one. And so because there was all these companies moving into Austin, there was also a lot of construction companies that were following their customers into Austin. So at the time, you had like Facebook and Amazon and all these guys that were relocating their businesses in Austin. And there was these companies that were wanting to move here, but they wanted to acquire a company to start. And so it's not that I necessarily went out and was, just asking people to buy my company. There were people we partnered with and they were interested, started coming up. And so there was a couple of them in particular that had approached me about it. I, thought my business was worth one thing. And, we went through this long kind of drawn out, looking under the hood, if you will. They're looking at our financials and looking at, how much revenue growth, profitability, what our balance sheet looked like. And, and again, I felt like I had a pretty good business at the time at 35, 40 employees. And we go sit down for lunch. It's kind of a funny story. I went and met with this company. We went to lunch. One lesson I learned about this is if you're going to go talk to someone about selling your company, get to a deal before you go sit down and have lunch with them, because lunch is going to be real awkward if things don't go well. And so, so they hit me with a number and I was just totally blown away. I mean, it was like less than what we made in like, a few months. And I'm not talking revenue, I'm just talking about like profitability and whatnot. And so, that was kind of deflating. I obviously said no to the offer that they gave us. Is very low, but I learned a couple of like really good lessons. First off, like if you were going to sell your business, or even if you're building your business with no plans of ever selling it, you probably want to be building value into your business. And so knowing the way that like companies evaluate businesses and value like what you're doing is like, it's pretty important to know and kind of have in the back of your mind as you're doing things, because operationally you can make adjustments. And so some of the things we did to make an improvement, right? So at that point in time, we were growing like crazy, like literally every year, but maybe not doubling revenue, but we were probably 50, 60, 70% increase in revenue. We're increasing our staff. And one of the biggest issues I think we ran into is I was focused on top line growth. And it wasn't necessarily the most efficient growth. Like we were pretty good about estimating jobs with like a certain profit level and a certain margin. Like we're real focused on margin in the back office. But then when we'd get to execution, we were so consumed with like building relationships with general contractors, with owners, and kind of like expanding our footprint that, first off, we never said no to anybody. If someone came to us and like, hey, we want you to bid this project, like it's a hospital. It's like, well, we've never done a hospital. It's like, well, let's try. That's probably not a good idea, right? So we didn't say no enough. The other thing we learned was like operationally it could be very difficult to execute on a project, but even just estimating a project, like certain projects, there's a different level of overhead it takes to do a University of Texas college project that's 2 or 3 years out into the future versus like a tenant finish out that's like they're putting in front of you 3 weeks before you're going to go do the work, right? You're going to do one estimate, you're going to bid it once, you're going to win or lose, and you're going to move on. And where some of these other projects, that's not the case. You kind of have to be, set up for that. And so we really started looking at like, okay, let's not worry about growing the business anymore. Let's focus more on what our net profits are, because at the end of the day, like some valuation is going to be based on your net profits. And at the end of the day, like as a business owner, I'm going to be a lot more happy if we're keeping more of the money at the end of the day than just having high revenue. And I'm sure you've heard this before, but there's that old saying, what is it? Revenue is vanity, profit is sanity, cash is king. And well, it's really true, right? And so we started really focusing on, how can we improve our operational efficiency? How can we like not bid as many projects that we may or may not win and spend a lot of money bidding and hiring estimators and stuff to go do that. Let's take the team that we have and try to like win more with less people. And so we started doing that in our back office. I think I even let go of like, I had a couple of bad seats. I had an estimator and a PM that were painted, but got rid of them. I got rid of a couple crews that like just weren't producing on the execution side as well as we needed. And so by focusing on net profit and then going and looking at like, your gross profit margin, kind of your key building blocks to net profit, that's kind of like a lagging indicator, right? We started focusing really heavily on like gross profit margins. And so that meant we had to like really improve our estimating and like how we're pricing our jobs. We really focused on decreasing our overhead relative to like our construction volume. So that meant that we had to like, we just had to get real, like we couldn't just go hire estimators. Estimators had to bid the right projects that we could win and we had a good shot of winning, so that we didn't like outpace our gross profit margins. And so we really just started leaning in on that stuff. And in the next year, we did probably 10% increase in revenue with, I'd say I probably trimmed the team down 7, 8 people. And with that 7 or 8 people, I mean, we almost tripled our net profit. And so that was the big difference, was just really slowing things down, focusing on efficiency and efficient growth and not just growth for the sake of growth, it made the business significantly more valuable. I mean, quite a bit more valuable.
Was part of your strategy to change the type of contracts you were going after? Like, did you do less new build and more service contracts type work or not?
We did eventually do that. So because of the type of business, and not every construction company can do this, but if you're electrical, mechanical, plumbing, like there's a lot of money, and I can dive into that. It's from a valuation perspective if you think it's helpful for folks, but like there's multiples on service that's like a lot better than like new construction. We didn't change focus from like new construction to service at this point. We moved away from like, for example, we were getting a lot of these like big general contractors that did like university work, or they did they did a lot of like not government contracts but like SLED type work. And what we found was that like every one of these projects were a year and a half out in the future. They were in the design stages, and we were going to have to bid this thing 10 times before we ever even had a chance of winning it. And so, and I'm not saying people shouldn't do that kind of work, but like that kind of work, you need to know how to do that. And you need to know how to win. I get the impression that you have to like bid real low and know how to change your people. And that really wasn't in our DNA at that point in time. And so we moved away from doing that kind of work because, we had to have a bigger estimating team. And that was one of our biggest overhead costs, was the amount of estimators we had. And by not doing that work, we were able to improve our hit rate. We were able to bid more projects and bring more revenue in with less estimators. And the other thing too is some of those projects we won, they just had a much higher overhead associated with them, like the billings every month. Like if you had a change order, like you had to jump through hoops to get it approved. There was just a lot of like operational inefficiencies. And not to mention those are generally just lower margin jobs. I mean, they're bigger, but you've got to be set up to go do that kind of work. And we weren't. And so we just moved away from that type of stuff and focused on a couple of key general contractors that we had really good relationships with. They trusted us, we trusted them, and we're just pumping out estimates and then going and doing jobs. But because it was consistent work, it wasn't like one day we were doing a commercial project and the next day we're doing a hospital, and you got like the bubble around you and all that stuff to work in. We focused on just the stuff we were good at, and it just really improved our profitability and our ability to execute.
You said you were in that business, and then you had this other thing you wanted to get to. So you made those changes, optimized the first business, sold that. Mm-hmm. And then what was the next thing you got into? Let's talk about that.
I'd mentioned earlier, like before I got into contracting, I started out kind of in technology and moved into contracting. And so, one of the things that was really apparent to me when I first started building my business, like I was having a blast doing it, but I was like, man, like there's a lot of just like inefficiencies, like everything's paper. I would estimate these jobs, and I'd get, jobs every week, and I'm driving to Kinko's and, I'm printing out a plan. And by the time I get back to the office, the general contractor's already sent me a revision. It has changed. I'm like, I throw that thing away, and I gotta like compare this estimate to that estimate. And so I saw these like inefficiencies. And so the tech part of me was like, there's an opportunity here to help the industry. And so I rounded up some engineers, some technical engineers, developers that I'd worked with for years in a previous life. And I was like, hey, look, like this is how we're doing this in construction. Like you go look at these big billion-dollar companies, and they're literally printing out plans, highlighters, scaling the drawings. And I was like, it's just super inefficient. And they couldn't believe it. And so we created a startup, built a cloud-based takeoff and estimating application. And at the time, I think there was only one other company that was doing this. There was a lot of like old school kind of on-prem takeoff tools, but there wasn't anything where you could do a takeoff and then estimate it and then create a proposal all in the same product. And for me as a business owner, I knew that takeoff was an issue, but one of the biggest issues was going from takeoff to estimating to creating a proposal. Like every one of those work streams like took time, and there was duplicate data entry. And I was like, if I can consolidate those, it's going to like make it easier for a company to be able to estimate a lot more efficiently. And so we built this product. It was called Esticom. This was in 2015, 2016. By 2019, I think we had 2,000 customers or so that, it was a big port. It was predominantly electrical subcontractors, mechanical, like MEP contractors. And then we really started bringing in a lot of, and actually surprising to me, because I didn't know the GC world. I always thought the general contractors actually do takeoffs. But to my surprise, they actually do. We ended up having a ton of general contractors that were using the product.
What happened to that business?
We started getting a lot of customers. Things started going really well. And a lot of the bigger project management companies and actually it wasn't even project management. It was a lot of companies started approaching us because there was these really cool integration stories about acquiring us. And, this happened for about a year or two. And we weren't in a position, we didn't want to sell the business. We wanted to keep building the business. Interesting story, Procore Technologies, which probably everybody knows the company, they approached us. We became partners with them. We partnered over, probably about a year or so. And there was just some really cool benefits that we saw where you'd go from an estimate to being able to create a budget, create your purchase orders, track your actuals against your estimates, and then come back and update your kind of product database, if you will. And there was this cool, full circle that we could do with Procore that we were never, we always wanted to be able to do that. We wanted to go from estimating to building to measuring the two and then kind of tracking them. But it was that's a 10, 15 year plan for us to be able to do that. Well, Procore, we just kind of fit right in. And it was on day one, we could do that. So they ended up acquiring us. And I spent, 3 years working over at Procore, which was a really awesome experience as well.
So what would you say were some of the biggest lessons you learned from selling those businesses? A lot of people don't have any experience in the mergers and acquisitions world. What were some of the biggest lessons that you learned from that?
First off, the construction business, completely different than the software business. The way they evaluate it, it blew my mind how different these two. On one hand, they're picking you apart about every single thing on your balance sheet, everything on your profit and loss statement. And the valuations are based on EBITDA. Largely, they're based on what your net profit is, right? And there's some different ways that they evaluate a company. They'll look at, how much, what kind of assets you have. But if you really boil it down, it's we're going to give you some X multiplier on how much money you retain. And then, as I mentioned earlier, if you have a service component, if you're an electrical company or something like that, I would highly suggest looking at improving, keep doing construction, but also build your service business, because the multipliers are much higher on the service side of the business or something that you have a contract on. So that was one of the biggest lessons. Was okay, after I got that first gut check, I was we got to improve our net profit. And two, I need to set the business up in a way that we can show what our service revenue is that we have contracts on. And we need to build this, because I wasn't really focused on it before. We need to build this because instead of getting a 3 or 4 or 5x multiplier on the net profit over here, I might get 7 to 10x on this. I didn't switch focus, but I definitely started, building this up. And when we do an installation for a company, before we would just be okay, we're done. There's a warranty. But after that, I would go to the company and say, hey, let's set up a maintenance contract where if anything happens, we're going to come in and do A, B, and C, and we're going to give you fanatical support. Right. And so we'd put these maintenance contracts in place that if anything went wrong, we'd show up on day one and fix it within a certain amount of time. And so that really helped us quite a bit with our valuation. In terms of mergers and acquisitions, it helps if you find a strategic buyer, right? If you just go put your business for sale, you're probably going to get people that are professionals at buying companies that are in distress or whatever, and they're going to beat you up and give you a very, very not a good multiple. Right? You're better off finding someone where there's some synergies or competitive, whatever it happens to be. You want to find a strategic buyer, because it makes a big difference. The other thing that I learned, and this is probably the most important lesson out of all of it, while I improved operational efficiency and I improved our margins and things like that, at that point in time, I went and found, I was kind of new to business, but I was very, a lot of people start contracting business, they want to go work in the field, they don't want to work for the back office. I was the opposite. I wanted to be in the back office, and I would go to the field because you have to be in the field. You have to understand what's going on. But I really wanted to be in the office, dialing in processes and systematizing things and I loved all that stuff. That's one of the things I love about your podcast is you really, peel the layers back on pre-construction and building systems and things like that. And so that was something that I just geeked out on it and enjoyed doing it. When I started my business, I went and hired like an accounting firm. And I was like, hey, what do you guys know about construction? And they're like, oh yeah, we know all about construction. But I didn't really like look deep enough and understand that like, okay, they have 2 construction companies that are probably service-based businesses. And then they have 150 SaaS companies or tech companies or whatever. Like they really don't know anything about construction. And the reason I say that's important is when I originally tried to sell the business, my business was very much misrepresented in a way that was negative to me in terms of our financial statements. And a lot of this is very nuanced to construction, right? So I'll give you some examples. When you looked at our profit and loss, like in my gut, I knew that we had more profitability than we had, but I didn't have a way of showing that on my P&L because we were measuring revenue based on billings, right? Well, in construction, if you get any construction accountant that's worth their salt, they're going to tell you that like it shouldn't be based on billings. It's based on earned value or work that's put in place. And so in any given month, I would have, all of these expenses that are coming in that are hitting my books for payroll, for materials, for subcontractors, for, all the things that go into building a project. But I wouldn't have any revenue until I hit like a billing milestone or until I hit, some milestone to be able to bill. Well, if you're doing it right, you would have you'd be doing percent complete billing and you'd be measuring like, okay, we've had this many costs come in this month. There's a corresponding amount of revenue that's associated with that. And so because I didn't know that and because my accountant wasn't telling me this, my books were not as good as they could have been, right? That was number one. Number two, and this one was a real big one, especially as we started doing bigger projects. We're not accounting for retainage. So every job we would do, they would withhold 10% retainage. And like any contractor that if you don't have someone telling you to do this, we would invoice the customer and we would just short invoice it 10%. And then I had a spreadsheet with like all the retainage and we get to the end of the project and I'd go start sending new invoices. Well, the problem of that is like, you might not do that for 5-6 months from the month that the work took place in. And when you look at that month or you look at that year, 10% coming out of your profitability. I mean, when you think about like most contractors they're in single digit profit margins, right? Like that's like a big misrepresentation of what your business is. And so long story short, after I got that gut check, I went and hired a construction accounting specialist and they came in day one. I mean, they're just like, Chris, like, what are you doing? You're not measuring work in progress properly. You've got like I kind of was doing it, but they're like, it's not represented on your financials. You're not doing that properly. You're not accounting for retainage properly. Like when you withhold retainage, on your balance sheet, there's accounts that need to go up or down depending on whether the retainage is owed to you or whether you owe it to somebody else. And we weren't doing that properly. We just had a spreadsheet that was outside of the system. Tightening that up along with just improving the operations of the business, like, I mean, we literally significantly improved the value of the business.
So let's talk about what you're doing now. Your business was acquired by Procore, and let's talk about what you're up to now.
One of the things that, and it kind of, ties into my experience as a contractor, but one of the biggest pain points for me was always accounting and financial management. A lot of contractors out there, especially small, medium-sized contractors, they're in this hard spot where like there's not a lot of good options for them in the accounting department. And so what I've done over the last year or so is I put together a team and we went and built a construction accounting application. It's called CrewCost. It's purpose built for construction. I got some of the best construction accountants and financial managers to kind of come in and help us build what a small and medium-sized business would need. And when I say small and medium-sized business, I'm not talking about the 2 trucks in a truck they're doing remodels and service work. Like those people can probably use like a generic accounting application that's relatively inexpensive. I'm talking like, say 5 to let's say 50 million in revenue. And so we built an application that has job costing, WIP reporting, retainage tracking, and everything that a contractor would need to like run a successful business all in one package. and probably the most important part is we made it easy to use. We removed a lot of the complexity that, when you go up market, like there's actually some really good accounting packages. They're just built for more like enterprise level companies. We've gotten rid of a lot of the like crazy reporting and all the customization, and made it more, you can customize it, but it's not, like where there's a lot of heavy implementation. We've made it really easy where someone can sign up and start using it today and start seeing benefits. So
what would you say are some of the biggest problems that construction business owners are facing that you set out to solve with CrewCost?
Because I've worked at Esticom and we were talking with so many contractors, and because of Procore, I got to listen to a lot of contractors. I'd say probably the biggest problem that we see with business owners is they're analytical. They want to make data decisions based on data that's there. But, and you probably know this, Todd, there's just so much data that it's overwhelming, right? Like it's a cost business. You take a typical $10 million contractor, they might have 500 to 800 costs, like invoices, bills coming out of every month, right? And it's like, how do you take that and build that into something that like tells a story that I can use to direct my business and make better decisions? And so the biggest issue I see is that the contractors have all this data in different places. They got them in spreadsheets, they've got this stuff over here. A lot of them just ignore it because, the reality is to go capture all those expenses and code them and get them into a format that like someone could then go use to make a good business decision. A lot of times that costs so much money to do it because there's such a high volume that like it increases your overhead to the point that it almost isn't worth doing. And that's the argument we hear from a lot of the smaller contractors. They're like, I could go do all that, but it's, that the cure is worse than the disease, right? Like it costs me more than what I'm saving from doing it. And so what we've tried to do is like really make that easy to ingest all those expenses and cost it against a job and tell a story of like, hey, how are you doing on these individual projects? In the back office, how's your overhead trending over time? And are you applying the right overhead amounts to your jobs? Like we make all that stuff like just it's available on day one. You're going to see it. I'm sorry, not available on day one. It's right there, like in your face at all times as you're using the product, so that you can, you kind of make better decisions.
Hey guys, Todd here. If you own a custom home building or remodeling business, let me ask you a few questions. First, how often do you wake up in the middle of the night thinking about project details, financial issues, or something else about your business, and you can't go back to sleep? Are you spending more than 10 hours a week working in the business, wearing multiple hats, putting out fires, and you feel like you can't work on your business as much as you want? Number 3, do you have enough documented systems and processes, or is it all in your head? Number 4, how good is your handoff of projects from the office to the field? Are you getting hammered by the just enough to start trap, doing just enough to start? And then lastly, do you feel stuck? Do you feel like you need to grow, but you're scared to, and you don't know how to do it? Maybe it feels like you need to hire, but you're afraid to make a mistake, and you're worried you can't afford to hire somebody. Well, if any of that resonates with you, you're not alone. And if you want to make your business a source of more freedom and a source of less stress, to systematize your construction business, and our team here at Construction Leading Edge has helped over 300 builders and remodelers systematize their business, and we can help you too. The first step is to schedule a call with my team by going to constructionleadingedge.com/apply. That's constructionleadingedge.com/APPLY, or you can send a text to this number, 877-755-2410, with the word apply. That's 877-755-2410. Just text the word apply and we'll get back to you. Now, let's get back to our episode. People listening are probably thinking, this sounds like I'm using QuickBooks Online or QuickBooks Desktop right now. This sounds a lot like QuickBooks, but more specific to construction. Is that an accurate assessment? Like, is that what are you offering a different and better solution than QuickBooks?
Absolutely. And look, QuickBooks is a great tool. If you're below a certain size, it's perfect, right? But at some point, you're going to outgrow QuickBooks and things like retainage tracking. Like you can't track retainage in QuickBooks. And so that's a problem. You don't have, cost codes and cost types. You don't have, you can do some job costing, but because you can't break it down to cost codes and cost type levels, you lose a lot of the data that you need. If you're small, that's perfect. You don't need that level of breakout. But if you're bigger, that becomes a problem. So yeah, it's QuickBooks easy, but we have the things that are very specific construction to give you the data you need to make good decisions and data backed decisions.
You have quite a bit of experience working with being a contractor, creating your own software company, and then working inside of Procore. One of the biggest challenges people have is how do I get my team to actually use the software? How do I get them to implement this thing that it's clear we need to do it? I'm about ready to fire my people because they won't fill out their daily logs. They won't fill out their freaking time cards. They won't fill in the blanks. So what advice would you give to somebody who's trying to get their team to actually implement something new? Any tips?
The biggest advice I can give anyone is that you have to start simple. You've got to give your team the why. Like, hey, this is why we're doing this. This is why this is important. I'm not just trying to give you more work to do every day. But you have to start simple. Like one of the biggest trip ups that I saw companies do for years at Procore and even Esticom is they'll read a book as a business owner. You read a book or you read a best practice, and then you go from like guardrail to guardrail. Like we have nothing in place to like, I want to take the whole CSI database of cost codes, and everything you do, you need to task switch and change to that particular task, right? And so my advice is always to start like way simpler than that. If you're not doing any job costing, or if you're just job costing at like the total project budget level, like add some layers in there, start breaking it up by labor, materials, equipment, subcontractor, other basic cost types. And then once you get some traction with that, then start tracking maybe like, for subcontractors, something that I found is really effective is they'll measure like their rough in versus their trim out. They'll have like a couple of cost codes, like if you're electrical, it might be you have a lighting cost code and there's a rough in component and a trim out component. But if you go put, hundreds of cost codes in there, first off, no one's going to want to use it. It's just too overwhelming. They're going to say no to it. But like the bigger issue is the data is not going to be accurate. Like if the way you're costing your job by cost codes does not align to the way the guy estimated it or the girl estimated it, the data is worthless at that point. So you got to start real simple, get some wins. Once you get some wins, then only add those additional layers in there. If you're like, we really need to like, this is a big cost bucket and we need to break that down a little bit so we can see a little bit, we need to see a little more further into like how we're going right or wrong on that particular. Only add the complexity if you need to.
You probably don't need to track your 3-inch screws versus your 1 5/8 screws down to that level. If you have no cost codes right now, start simple, get some wins. I like to use the analogy of it's like sighting in a rifle, right? You've got to get some hits on the target, and then you start to dial it in. Like, okay, it's an iterative process. You're going to track it. You're going to estimate. You're going to track, and then you're going to close that loop. Say, all right, we're high and to the right, so we need to make some adjustments. Then you go through another cycle, fire another few shots with the rifle, go through another project cycle, go through another month. But it's an iterative process, and you've got to be willing to stick with that iterative process. Another mistake I see a lot of people make is the owner will read a book, listen to a podcast, which is probably our fault. Look at some great idea, like, oh, there's a shiny object. And we need to implement this shiny object. And they do that like every Monday after they spend Saturday afternoon on the lawnmower listening to all these great ideas. I'm like, oh, I can't wait to get to the office on Monday and lay out this strategic plan. And then after about 6 weeks of that, the team's like, okay, it's just another idea that's going to fizzle out. So you only have so much powder, so much gunpowder you can use, and you can only take so many shots on your team. So make sure you're using it wisely and avoid shiny object syndrome. Have you seen the same thing with the shiny object syndrome?
People get fatigued, right? Like they're every week it's something new, and it can be you just kind of one ear out the other after a while. And I mean, I definitely think you have to be very strategic about what you're going to do, and pick, like you said, pick your battles. Like I think the analogy was great about iteratively making changes and get these small wins. Absolutely. And look, the other thing I've seen that works real well too is if you can get buy-in from like your foreman and your superintendents, and you can get their feedback and then let them go implement some of this stuff and like really get their buy-in. I've seen success go up quite a bit versus everything just coming from you. I've seen a lot of success with like going to the team and asking them like, hey, what do you think we need to be doing better here? And they just have a lot more buy-in on things like that.
Yeah, I really think that's the secret sauce. One of the things we do with our clients is we help them design their pre-construction process. So a big part of that is having a team session, asking the team, hey, what are the problems we need to solve here? Our clients would be like, I don't know. I'm concerned. I don't think the team's going to have anything to share. I think it's going to be a waste of time. I think they're going to be annoyed. I think they're going to make fun of this process. But over and over, we hear people say, I was blown away. We just had one of our clients shared this last week. He said, I did this with my team, and I realized there were some problems we've been having for months, and nobody said anything. It's because nobody asked, what's the problem? So I think that's great advice. A big mistake I see people make is the owner goes into their fortress of solitude. They close the door. They come out with this fully baked process and then roll it out to the team, sort of like Jerry Maguire did. He rolled out his manifesto to everybody, and then they're annoyed because nobody follows it. And it's either because it doesn't solve a real problem, the team's not bought into it, or it's just one of those fads. So yeah, get your team involved. They know what the problems are. It's great advice to let them actually develop and implement some of these things, because they're going to be much more likely to implement and adopt something that they're part of developing. I like to talk to guys like you who work with hundreds, if not thousands of construction business owners. What are some trends with construction businesses that you're seeing that people need to know about, that other construction business owners need to know about? Do you see any data points of like, hey, this is where the industry's going. These are some opportunities. These are some risks. Anything come to mind there?
One of the things that I've seen recently that is blown my mind is the adoption and the thirst for some of the AI type products, which in construction, usually construction's an industry that's considered a little bit of a lagging in the tech department. Like they're not, usually a few years after it's mainstream. Construction folks are pragmatic, right? They're not, you don't want to jump on every new fad that comes out. I've been surprised at how many people are asking me about AI. And I'm not talking like, Chat GPT, like all this crazy stuff that out there. There's a lot of that, and that can be, there's a lot of noise, and that can be a little bit fatiguing, but there's like some really cool, AI and ML tools that people are using that are really improving companies' efficiencies. And so if you think about like construction has a ton of these things that are like, we've known for years, like that's probably not a good use of our time, but you have to do it. And there's some tools now that like, while I wouldn't use AI for everything, there's some tools that can like really streamline some of this stuff, and contractors are thirsty for it and they're implementing it. So I'll give you a couple of examples that I've seen people pick up and use. And by the way, I don't have anything to do with these companies, but just saw them kind of like really catching a lot of momentum. Like one thing in pre-construction, you mentioned that earlier. So like anytime you're estimating, probably one of the most time consuming things is you have to go through this big, huge spec sheet, and you got to read, and it's usually boilerplate, like 99% of it's the same, but there's landmines in there, right? Like there's something in there in the general requirements that's going to get you. There's something, who does the electrical hookup for the mechanical? Is it the electrician or is it the mechanical? Like who owns that scope of work? And so there's this company called Document Crunch. Again, no affiliation with these guys, but it'll actually go read your contracts and your specifications. It'll kind of like create like a baseline of like what you're used to reading and like what's normal, and it'll show you what's different. And you can literally like ask it questions. So instead of going and digging through a big PDF, you can basically chat with this thing and say like, hey, who's responsible for the electrical hookup or the mechanical? And it'll summarize it for you based on what it sees in that document. And it'll do some other really cool things like, when you're on a job site, if you're about to have to do a change order and you don't know you can even get away with that or not, like not get away with it, whether you're allowed to do a change order for this particular thing, it'll literally summarize out for you, like whether you can do that or not. So it's just a huge, huge increase in efficiency. And like, you still probably got to go read those specifications, but it'll eliminate you reading over the same things that you've read 100 times. And you can focus on the important stuff that would get you, that you would probably, like for me, that was always my biggest concern is we're going to miss something. And I think that's any company is like, where's the scope gap? What did we miss? And if you can decrease that. And I think that tool helps with that quite a bit.
Yeah.
So that's one. Any questions on thoughts on that? Or
I wish I had that because like who's responsible for making the connection to the gas line from the building to outdoors? Like, is it the plumber? Is it the pipe fitter? Is it nobody? Like I had a $60,000 change order once on a big project because the GC left out the whole gas line across the site from the street to the building. So that would be great. Like who's responsible for the gas line on the property? Who's responsible for tap fees and permits and things like that? Yeah, love that.
Where do you go find that, right? Like it's like buried in this huge,
you have to read everything. Yeah, you have to read every potential spec section to find out. And then there could be discrepancies there. So that's cool. What else you got?
So one other one that I've seen that's really cool is every company has to enter a ton of expense. There's all this like administrative paperwork you have to do every month. You're getting bills in the mail for, a bag of screws to, subcontract invoices to, hundreds and thousands of them. And every company I've seen has this like month-end scramble to basically close the books. We need to get all of our costs in so that we can bill our customer. And it's an all hands on deck. It's a scramble. It's a pain in the butt. And you got to hire a bunch of people to be able to do that manually. Well, they've got technology now that will, using machine learning, will actually read these invoices like super accurately and create the bills for you. And so you go from like entering this stuff in to just reviewing what was entered in. And what's even better is instead of like taking a PDF and trying to figure out how to attach it to the job, it like can automatically attach it to the expense, route it to the PM to get that, there's always this ping pong match between the controller and the PM of like, hey, is this invoice valid? Was that work put in place? And like, it can route it to the right person. They approve it. And then, so it just streamlines that whole process. And that's all from, just it reads and enters the data for you. So someone's not doing duplicate data entry. And the idea is now maybe you don't have to go hire that new person like that. The one or two people you guys can do like a higher volume of work for less. And no one's going to complain that they don't have to type those invoices in anymore. Right. So like, that's a really cool use case that can like really improve, decrease overhead costs. Right.
Absolutely. What's the name of that technology?
We actually have it in our product. And then there's a couple of kind of standalone products that do it, that you can integrate it with your accounting software. So there's a company called adaptive.build. I think they're probably one of the leading tools right now. They've got a really neat product. It's very niche and it just does that. And then it talks to your accounting software. Now, something those guys do that is also cool. I don't know. Do you have a lot of home builders that listen in? So yes. One of the things that, again, I have no affiliation with these guys, and I actually probably almost compete with them more than anything. But another thing they do that's really cool is they actually build the cost plus reports for you. So if you've ever had, like, again, I don't know if you've ever built a home, but one of the biggest pains for everybody is at the end of every month, you have to go get all the receipts and put them in this big document that you then go present to the homeowner or to the owner and say, hey, this is what we're billing you, and here's the backup to that. It just does it automatically, right? You get to the end of the month, your report's created, the costs are, it's just a huge time saver, like literally quantifiable improvements and not like little incremental improvements. Like it's a significant improvement.
I find that a lot of construction business owners have these misconceptions. I like this quote from Mark Twain, who said, "It's not what you don't know that hurts you. It's what you know for sure that just ain't so." So I find that a lot of entrepreneurs, especially construction business owners, they believe things to be true that aren't true. They just ain't so. And those things tend to hold people back. What are some of the things that you believe, that you run into, that you see construction business owners believing to be true that just ain't so?
I'd say probably the biggest thing I've seen contractors do, and the only reason I've had a chance to like see a little bit under the hood, is with my estimating product, we naturally always would get to the conversation of like markup and profit, markup and overhead. And I would say the biggest kind of misconception that I see, especially small contractors doing, is that they assume they either don't account for their overhead and they just put like a profit number and kind of boil that in, or they have this assumption that their overhead is lower than what it is. They'll say things like, "Oh, I'm small. I don't have an overhead. I don't have an office. I don't have this." And it's like, so the misconception is that they assume that their overhead is smaller than the big guys, when in reality, the big guys' overhead is way smaller percentage wise than theirs. I don't know if the listeners know about this, but there's the Construction Financial Management Association is an association that I absolutely love. They have this thing called the benchmarker report. And in this benchmarker report, you can go look at how other contractors that are like you in your area, that are your size and revenue, if it's subcontractor versus GC, and they'll show you like what these typical gross margins are, what their net margins are, what their overheads are. And you can use those to kind of compare yourself against. And so one of the things that's like really interesting is when you look at like in their categorization, they have like under 10 million in revenue. The typical SG&A, so sales and general administration expenses, is like 17%. 17% is relative to revenue, which is not even your true overhead. Your overhead is actually a couple of points higher. And so you talk to most small contractors and they're going by this old, you've heard 10 and 10, right? They're like, "Oh, we do 10% profit, 10% overhead." And it's like, well, the reality is the average is like 16, 17% when you're under 10 million. When you're 10 to 25 million, it's like 12%, right? And so most of these smaller contractors are grossly underestimating their overheads and they don't even know it. And I would say that's the biggest thing I've seen people mess up on and they need to fix, is to go really understand what the overhead costs are.
I've had some conversations where we've dug in with clients and they found that their overhead was 25, 30%. That's exactly why they were in financial crisis mode. And they just didn't even know it. The numbers were right there, unfortunately. Yeah, good stuff. Chris, here's one of the questions I'd like to ask everybody. What is something that you believe to be true about business that some might think is unconventional, controversial, maybe even a little crazy?
I've got a lot of contracting buddies. I've met a lot of folks over the years, and one of the debates I get in, and I'm usually definitely the minority in the room, is my stance on paying taxes, right? Versus, and what do I mean by that, right? Everyone has to pay taxes, but when you get to the end of a quarter or you get to the end of the year and you're profitable, a lot of companies as a practice will go try to spend that money on tools, trucks, boats, hunting leases, so that they don't have to pay taxes on it. In their defense, I think a lot of them, it's not that they're trying to avoid taxes, but in construction, a lot of times you have to pay taxes on money that you haven't gotten yet, and you may or may not receive it. A lot of folks say they don't love the idea of that. And so I get why they'd want to do that. But where I run into an issue with it is that, one, it's making your business less profitable. If you ever want to sell the business, your books just don't look as good. And two, even if you didn't care about selling your business, you never wanted to sell it, you can't make payroll with your brand new shiny F-250 truck, right? Like if there's downturns in construction, even if there's not a downturn, if you have a gap in your backlog and all of a sudden a bunch of your workers become overhead and you don't have revenue coming in, it'd be better to have that money sitting in your bank account, even if you did pay taxes on it, that you can use to float the business or you can use to invest in other things. And so, look, I'm not a tax accountant, and so there's definitely ways that I think you can avoid, or you can minimize taxes in other ways that are more beneficial to the business. I've seen people that buy the buildings that they're leasing. I've I've seen all kind of cool things like that. But going and buying trucks and hunting leases and things like that, like I think that can get you in trouble. So I'm usually the minority on that conversation.
Yeah, I'm with you there. It's not always bad to show a profit, and there are better ways, better things to do with those profits than just buy a piece of equipment that's going to depreciate. Yeah. It has its place, but it's not the go-to. And I've been in conversations with bonding companies who have said, look, you're profitable. You need to show some profit. It's good to reinvest, but you need to show some profit. The bonding company wants to see that.
Absolutely.
The bank wants to see that. Good advice. If somebody ever visits Austin, what is the restaurant or the bar they absolutely need to go visit, in your opinion?
Yeah, and this has changed quite a bit over the past 5-6 years. Austin's grown quite a bit, but right now my absolute two favorite restaurants, and they're actually owned by the same parent company, is a steakhouse called Jay Carver's. They're famous because they have this bone marrow deal that is just fantastic. And then there's this place called Red Ash. They have Italian food, but it's like very steakhouse driven. There's a lot of steaks and a lot of things like that. And they're owned by a company called Eddie V's that has been in Austin forever. And they kind of like, they did, two kind of spinoffs, and both of these places are amazing.
There's a bat bridge in Austin that goes over I think it's a lake. Not really, it kind of looks like a river, but it's a lake. Is it worth it to go there and watch the bats fly out from under that bridge? Yeah,
it's cool. It's something you probably wouldn't see anywhere else. The bats are usually around when it's hot though. So just, wear some shorts, bring some water. And yeah, to your point, it is called Ladybird Lake. It used to be called Town Lake, but it's a river. It's, the Colorado flows right through Austin. They dam it up. So it's kind of a lake, but it's really more like a river. It looks like a river at least.
Great stuff. So if people want to connect with you, Chris, or find out more about what's up with CrewCost and how it might help them, where are some of the best places for them to go?
The easiest thing you can do is go to CrewCost.com. We have a free trial, so you can actually sign up and start using our product without ever having to talk to anybody or spending any money. So that part's really cool. And then, even if you're not interested in accounting software right now, we spend a ton of money writing blogs for everything from how to job costs, how to track and improve retainage, how to improve profitability. We have really good accounting content folks on our team. We have some project managers that work at some, the Turners of the world or really big companies. And there's just a lot of really good free content on our website that you can go read and get lost in. So, if you just want to up your game, obviously check out Todd's podcast and go read some of the blogs on our website. I think it'll help you out quite a bit.
Well, I really appreciate what you've shared. A lot of great nuggets, tools, nuggets, a lot of great advice. And I appreciate you taking the time to be on here, Chris. It's been a pleasure.
Yeah, my pleasure, Todd. Thank you for having me.
Hey, it's Todd here. And one more thing before you go. Look, if you own a construction business and you want to put the right systems in place so you can either scale it up, maybe you want to step away from it, be able to take a proper vacation, maybe you want to sell it someday, maybe you just want to have more freedom, or maybe make it more profitable, or maybe you just want to get out of constant firefighting mode and make your phone stop ringing all the time. You really have three options if you want to make a meaningful change in your business. Option one is do nothing. Status quo, keep doing the same things, getting the same results. Option two, you can DIY it. You can do it yourself. You can reinvent the wheel. You can read books, listen to podcasts, try to piece together a solution, use trial and error. Or option number three, if you want meaningful change, is to find a proven system that delivers the results you're looking for. Sort of like if you use software for project management or for your bookkeeping, I assume you probably didn't try to code your own software. You found a proven system that delivered the results you're looking for, right? Well, if you're looking for a proven system to systematize your business, we've helped hundreds of construction business owners implement our systems in their business, specifically our nail the handoff pre-construction process in their business. It works for home builders, remodelers, commercial general contractors. It also works really well for trade contractors like electricians, concrete contractors, site, utility, plumbing. And it's part of our Systematize Your Construction Business program. So if you want to see what systematizing your business looks like, what nailing the handoff looks like, and the positive side effects that come with that, Then the next step would be to schedule a free business evaluation call with my team. And you could do that by going to constructionleadingedge.com/apply, APPLY, or just go to our website, constructionleadingedge.com, and tap the Apply Now button. You'll learn about the 5-step process we've helped hundreds of people implement to systematize their construction business. Most importantly, you'll get an objective third-party evaluation of your business to answer one really big question. Is your business designed to fail, or is it designed to succeed? So let me ask you this. If your business was unintentionally designed to fail, when would you rather find out? Now, while there's time to do something about it, or later on when it's maybe too late? This business evaluation call is totally free. There are no strings attached, no pressure. And it could be the best hour you've spent working on your business in a long time. So our schedule fills up pretty quickly. So if you're interested, go over to constructionleadingedge.com/apply, or go to constructionleadingedge.com and tap the Apply Now button to book your business evaluation call. Hey, thanks for listening. I hope you got value out of this podcast. If you could take a moment, if you did, and leave a rating or a review or share this with somebody who needs to hear it, I would appreciate it. Todd Dawalt from Construction Leading Edge. Thanks so much, and we'll see you next time.